stories.
Your freedom.
The Peter Schiff Show.
This is Peter Schiff here at SchiffRadio.com on a Monday morning. I guess it's a semi-holiday here. It's Columbus Day. Banks are closed. A lot of schools are closed, but the stock markets are open. And, in fact, the market's off to a very strong start. The Dow Jones right now up almost 230 points. The catalyst today, I guess, is the news over the weekend that Germany and France are going to be serious about solving their banking problems. There's no real plan that's been announced as to what the solution will be, but they simply stated that their plans were to have a solution, and, of course, the markets are rallying on that. At least that's the excuse. Not really sure what the fundamental difference is between today and Friday, but nonetheless, the Dow is up strong. Gold also up. I'm looking at the ETFs. GLD up the equivalent of $26. Silver up almost $1. Oil strong, up about $2 a barrel, back up to $85 a barrel for crude oil. In fact, above $85. Dollar headed the other way, a pretty big drop. The dollar index down more than 1 full point, down at about 77.60. Some of the biggest movers, again, are the commodity-sensitive currencies. The Aussie dollar up 2% on the day, actually slightly more than 2%. The Canadian dollar only up about 1%. You know, Canada is having a holiday today. Canadian markets are closed for Canadian Thanksgiving. In fact, I am headed up to Canada later this evening. I'm flying up. I'll be there through Thursday. I'm flying into Toronto. I'm coming back from Montreal. I'll be up there. I've got some appointments, institutional appointments related to my company, Europe Pacific Canada. So I don't know if I'm going to run into anybody up there that listens to the show, but if I do, you could be on the lookout for me. I am planning on taking some equipment with me up to Canada and doing the show myself Tuesday and Wednesday from Canada. Thursday, we are planning to have a guest host. Thomas Woods will be sitting in. He's always a popular guest host. In fact, he's got a great guest on the show as well, Judge Napolitano, who will be on the show talking about his new book. So it should be a pretty good show with both Judge Napolitano and Thomas Woods on at the same time. That doesn't happen a lot, so it's a reason to tune in on Thursday's show. But anyway, the Canadian dollar, as I said, up only about 1%. The euro is having a very strong day as well. The euro is all the way back up to 136, up almost, 2.6 cents, closer to 3 cents than 2 cents. This is a big move in the euro currency. I say a couple of key numbers are the highs from September 29th of 136.11 and September 27th, 136.18. So we're challenging those levels right now. That would be pretty significant if we can close above, let's say above 136.25. There is some resistance, maybe as high as 137.5. But if we get through that 136.25, we close there. I think we at least have a rally coming to 140. That's going to be a lot of overhead resistance up around 140. But if we can close above that, the lows could be in for the euro. I know a lot of people have been writing the obituaries of the euro while overlooking the far more dire health of the U.S. dollar. So I think if we do have some kind of Band-Aid on the European situation, maybe we'll find out about it later this week, we could start to see a big rush for the exits out of the U.S. dollar. Bond markets, I think the bond market might be closed today because of the Columbus Day holiday. I'm 100% positive. I don't really see any action going on in the bonds, so that could be the reason why, because I would expect to see the bonds getting clobbered on a day like today just based on the typical trading patterns that we've seen. Stocks up, commodities up, gold up, dollar down, bonds down. That's kind of been the pattern. And, of course, you can switch it to reverse when things are happening in the other direction. But anyway, what else happened over the weekend? You know, we had some interesting political polls, straw polls that happened over the weekend. Probably the more significant of the two was the value voters straw poll, in which Ron Paul won handily. Ron Paul won 35% of the vote I think, in this value voters straw poll. These are religious conservatives, I guess the Bible Belt guys and Ron Paul won that pretty handily. Herman Cain came in a distant second, but he came in second. Interesting, there was not a single mention. I know Fox News mentioned it during the course of the day because, they have news on all day long. It's hard to ignore the poll. But I watched the Sunday morning talk shows, ABC, NBC, CBS, every show, every one of these shows, This Week, Meet the Press, Tim Russert, all these political shows. That's all politics. They all come out of Washington. Every one of these shows had a segment on the Republican race, the presidential race, and not a single one even mentioned Ron Paul on this Sunday. Now, maybe I missed, because I'm flipping back and forth. So if anybody saw these shows and Ron Paul's name came up, let me know. But it didn't even come up. They didn't mention the straw poll that he won. In fact, this makes it worse. I was watching one of the shows. Maybe it was ABC. I mixed them up. But Herman Cain and Newt Gingrich were there. They were both there, and they asked them a lot of questions. And they even pointed out how well Herman Cain did in the value straw poll. But not once did they mention the fact that he didn't win, that he came in second, and not once did they mention the fact who he came in second to, which was Ron Paul. And, imagine if Rick Perry would have won this straw poll. It would have been the biggest headlines. Comeback kid, Rick Perry comes back, wins the straw poll. Or imagine if Romney would have won. I mean, it would have been big, big news if one of the media anointed front runners had won the poll. But since Ron Paul won the poll, it's like the poll didn't even exist. And if they do mention it, they don't even mention the guy who won it, which is very interesting. Anyway, also there was another poll, a Midwest Leadership Conference straw poll, which was pretty interesting in that this poll was in Minnesota, which is Michelle Bachmann's home state. And basically in that straw poll, she didn't even come close to winning. She did come in second, but she only got 12%. Herman Cain got 52.6%. I mean, he cleaned her clock in her own home state. That's a big story. I didn't really hear anything about that on the news either, although maybe that took place later in the day. I know the conservative poll, the values poll, happened on Saturday. This other one in Minnesota, maybe it happened after these Sunday morning shows. I don't know, because I didn't even hear nobody talk about that, even with Herman Cain on television. But second place, she got 12.2%, Bachmann. Romney came in third at 11.3. Ron Paul fourth at 10.7 or fifth. So everybody was kind of bunched up, 11.1, 10.7, 12.2. I mean, the only one that had any difference was Herman Cain. So Herman Cain, Ron Paul are the winners of the straw polls over the weekend. Anyway, we will be back. This is Peter Schiff. I'll be taking your phone calls after the break here on SchiffRadio.com.
I'm spitting like pocket depressed with more saliva.
The Peter Schiff Show.
Flower bringers, I don't smoke crack.
Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com, and I am taking calls, certainly for the rest of this segment. At the top of the next segment, we have a guest, a former Lehman Brothers trader turned author will be on the show. Be an interesting discussion. But in the meantime, let me take a few calls. First up is Brian calling from Beijing, China. Brian, good evening. How are you?
Good, good. How you doing, Peter? Can you hear me okay?
Yes, I can.
Okay, good, good. I had one question. Well, first of all, I'm a big fan. I've been listening to you for about 2 years now. Thanks for having the show. I really appreciate it. So my question was regarding the Ron Paul campaign. I've been following, I guess, through the media, and yeah, I've also noticed, they've pretty much been ignoring the guy. So I had a question about campaigning. So during your campaign for Senate, I did a lot of phone banking for you, and I thought that was a very, just a very effective tool in campaigning. And I was wondering do you know if I guess is there a way to connect the Ron Paul campaign with your phone banking system? I guess is there a way to make that connection? Because I know that he has a lot of really loyal, fans who would really, do a lot of phone banking. Because I know for you, I know the phone banking works very well in actually getting your name out there.
I think the problem was we tried to launch the phone banking a lot earlier, and the system didn't work. People had problems. We had the wrong. By the time we found the right system, the race was probably only a month away, and that was probably one of the reasons that my numbers were so much higher than where I was polling. I ended up at 29% of the vote. And, the polls only showed me at, 5 or 6% of the vote, even, a week before the race. So I think I really had a sharp upturn. And maybe had we had that phone banking system in effect earlier on in the race, I might have been polling higher, which would have helped me raise money. It would have helped the media take me a little bit more seriously. But I'm sure, look, the Ron Paul campaign has a lot of financial resources. He's raising more money, I think, than any of the candidates other than maybe the top two, Romney and Perry. So he's got resources. Maybe they're already using the phone banking. I mean, where I think it would make sense for the Ron Paul campaign to do the phone banking, and it's not my system. It's out there. It's publicly available. I didn't invent it. I just used it. But they can use the exact same system. And where I think it would help is if they went into the early primary states, like in New Hampshire, like Iowa, where you have a small state where you really could call all the voters. And, Ron Paul's not going to have to spend any money on that because people can do it from their house and they just volunteer their time and they can make the phone call. So it would be probably a good idea for them to do that. I don't know. As I said, they might already be doing it. They might be planning on rolling it out. I have no idea. But certainly it's something they could do if they want to.
Yeah, I mean, I agree. I think that for your campaign, honestly, I have no doubt in my mind that you honestly could have won had your name been out there. Because, I spent hours and hours just, sitting in my dorm calling every night. And people were very receptive, okay, who is this guy? I don't know him. And I'll tell them about you. I tell them, hey, look, why don't you go check him out on the internet? And for the most part, people would say, okay, look, I'll tell you at least this. I'll check him out. And then I have no doubt, given the statistics, most of the people who I guess were exposed to you, they generally tend to want to vote for you once they're exposed.
Yeah, I think so. And I think a lot of the people who didn't vote for me not because they didn't like me better than the other two, but because they thought I had no chance of winning. And so they were voting for the lesser of the two evils. So let's say, because there are a lot of people that just didn't like Rob Simmons because he was too status quo, too liberal, or rhino. And there are a lot of people who didn't like Linda McMahon because they just didn't like the wrestling connection. They didn't like her trying to buy the election. So you had a lot of people that wanted to vote against Linda or wanted to vote against Simmons. And if they voted for me, they were afraid that the candidate they liked least would win. So they didn't want to throw their vote away. So they voted against Linda or against Simmons rather than voting for me because they thought that a vote for me was a wasted vote. But, had I been polling higher and, people actually thought I had a chance of winning, then they wouldn't have thought that voting for me was a thrown away vote and they would have given me their vote. So I might have done quite a bit better. I might have even won because I did have 50% name recognition. So you didn't need 50%. Linda McMahon won the race with 49% of the vote. So enough people had known about me that had I gotten their votes, I could have won. But, you never know.
Yeah.
All right, well, thanks for your call, and I appreciate your help, and I'm sure that Ron would appreciate the help if they do some phone banking here. And so hopefully the people, if he does do it, the people that help me will help Ron. Anyway, next up is Barry calling from Champaign, Illinois. Barry, welcome to the show.
Thank you, Peter. Under the assumption that we do have a bond bubble, let's assume that the bond bubble breaks. What happens to the non-European international bond funds in that type of a scenario, or the international bond funds from that aspect?
Well, it depends on, do those international bond funds also own U.S. Treasuries? Because, they could. But if interest rates rise sharply in the United States, they will probably be rising, although not as sharply, in other countries, which is one of the reasons that when I buy foreign bonds for my clients, I recommend that they stick to the shorter maturities, because I do believe that when the U.S. bond bubble bursts, it will at least temporarily send interest rates up around the world. Now, ultimately, I think that the world will enjoy lower interest rates after the U.S. bond bubble bursts, because when the world stops buying all these treasuries, what are they going to buy instead? I mean, the world is still going to have savings, but if those savings are not used to buy treasuries and loan to the U.S. government, they will be used to buy other types of bonds and loan to other institutions or companies or governments. So I think ultimately you could see interest rates coming down after they go up. But I think the initial reaction will be a rise in interest rates. So, it's bearish for bonds.
I apologize. I had a follow-up question, which you really got almost to there. Now, so the bond bubble breaks, and everybody sells their bonds and puts it to cash, and they're sitting there with all this cash. Where does the cash?
Well, remember, a lot of people don't sell. When the bubble bursts, it doesn't mean everybody gets out. It means some people sell and other people don't buy, and basically the money just evaporates. People say, "Where's all the money going to go that comes out of the bond market?" A lot of it's not going to come out of the bond market. It's just going to evaporate. It goes to money heaven. But yes, there will be by definition money coming out of the bond market, but there's going to be money coming into the bond market, because remember, for every seller there is a buyer. So what actually happens is the value of the bonds implodes, because in order for the sellers to get out, they have to do it at a much, much lower price. The real problem is for the U.S. government, because now it has to pay higher interest rates on all the bonds as they mature, and they need to roll them over, plus they have to pay a higher interest rate on all the new bonds that they need to sell to finance the growing deficit.
Pressure on gold?
Well, I think it's going to put upward pressure on gold, because the U.S. economy is going to be imploding, and the Fed is going to be printing like crazy. I think that even as interest rates are rising, inflation will be rising even faster. So, unless we get the Fed, aggressively slamming on the brakes, jacking up short-term interest rates much higher than long-term interest rates, I think the gold price keeps going up. And politically, that ain't going to happen, in the foreseeable future. I mean, I think the Fed is going to be trying to fight off the implosion in the economy that would result from the bursting of the bond market bubble. In fact, even Alan Greenspan, when he was on CNBC the other day, he said that he didn't think we were going to solve our problems until we had a crisis in the bond market. So even Alan Greenspan is looking for the bond bubble to burst, and he ought to know he helped inflate it. Anyway, hey, stick around. I know we have some more people on hold. I'll get back to these calls at the top of the next hour. We got a guest coming up, so it should be a good discussion of the financial crisis with an ex-Lehman trader. So we will be right back here on the Peter Schiff Show on SchiffRadio.com.
The Peter Schiff Show. We now return to the Peter Schiff Show. Call in now, 855-4-SCHIFF. That's 855-472-4433. Rebel Radio, the Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com. And joining the show now is Gerard Dillian, who is a former trader at Lehman Brothers. He worked there from 2001 to its demise in 2008. He specialized in index arbitrage. He traded the ETFs. More recently, he has authored a new book, Street Freak, Money and Madness at Lehman Brothers. Jared, welcome to the Peter Schiff Show.
Hey, thanks a lot. Thanks for having me.
Sure, thanks for having me on. So, in addition to your most recent book, what are you doing professionally since leaving Lehman Brothers?
Well, one of the things that I really wanted to do with Lehman Brothers, I kind of figured out in 2004, 2005 that I really wanted to write. So I combined the things I like best. I like to write and I like the markets, and so what I have now is I run a financial newsletter called the Daily Dirt Nap, and it's for professional investors. It's for hedge funds and banks, and it comes out every day, and it's focused on macroeconomic issues.
Okay, so let's turn the clock back to your days at Lehman Brothers. First of all, leading up to that financial crisis, and anybody at Lehman Brothers, to your knowledge, had anybody read my book, Crash Proof, How to Profit from the Coming Economic Collapse, or, maybe seen my mortgage banker speech for 2006 and kind of knew that this thing was a house of cards?
I would say the answer to that question is no. There's, first of all, like, in any large organizations are done, okay, which you probably know. Organizations are done. And in any large organization, there's a pretty strict division of labor. So, the things that I focused on, even though I looked at macro stuff, were pretty specialized, index arbitrage and ETFs. And even to the extent that somebody was, working in the credit part of the firm, CDOs or something like that, I mean, you got your nose to the grindstone. You're not really thinking about the global issues. Larry McDonald, his book, A Colossal Failure of Common Sense, kind of talks about who at the firm knew about the problems and really was thinking globally. My book doesn't really talk about that. It's really more of a snail's eye view of what was going on at the firm.
Yeah, it's just amazing, though, that a $20 book, if just somebody up at Lehman had read that book, Lehman would not only be alive today, but it could be the largest firm because it could have taken the opportunity to not only get rid of all that mortgage debt that it had, but it could have shorted it. And it could have come out on the winning end of the financial crisis. Instead, it evaporated. And I know, what was it like, being there? Because I know a lot of people, had a life savings that was tied up in Lehman Brothers stock. I mean, it must have been a real surreal experience to live through that.
Well, the weird part about it was, our counterparties basically stopped talking to us. I mean, Lehman Brothers was basically the easiest short on the street. I mean, it was a very popular trade. Everybody was short Lehman Brothers stock. And so people were being polite to us. They weren't, saying, hey, we're going to short your stock, or they weren't shorting Lehman at Lehman. But we knew that our own clients were short our stock and were betting against us. And basically the effect of that was we were cut off from pretty much all the news except for what management was telling us and what we could read in the press.
Yeah, in fact, a lot of people, I think, were shorting Lehman and buying the stronger companies like Goldman, which is why when Lehman finally went under, Goldman imploded as well. Although then, the government came to the rescue and saved the rest of the companies. But is there, it seems like the one thing that our leaders have learned or didn't learn from this is they think that the big mistake was letting Lehman Brothers fail. I think that was the only thing they did right. I think they should have let everybody fail. But how the people at Lehman, I mean, they must feel particularly angered by the fact that Lehman was the only bank that was allowed to completely fail.
Well, I mean, just to step back for a second, I mean, I think that is the lesson that people should take away from the financial crisis is that you can have a large, complex financial institution fail. I mean, it is working its way through the bankruptcy process right now. It's been 3 years, and it'll probably take another 3 years, but it'll make its way through the bankruptcy process. And you don't have to bail out every bank in sight. You see a lot about you see it right now in Europe. Okay, I mean, Greece is a very, very small country. It's a tiny part of Europe. And people are worried about this, contagion is the word that they always say, That's like the buzzword. I mean, what could possibly happen if Greece fails and these banks have Greek debt on their balance sheets and these banks fail, and they talk about this contagion effect. It doesn't work that way. Greece is a very tiny country, so it'll be interesting to see what happens.
Well, I think ultimately the government does more damage and more moral hazard with the policies that try to, limit the contagion. And that is a real source. And if you look at the protest movement now, the Occupy Wall Street, what is really fueling that mentality is the fact that all the banks were bailed out other than Lehman. If we simply had let more banks fail, we wouldn't have given capitalism such a bad name.
Exactly. I mean, the irony of this is that people are protesting capitalism, but the reality is we haven't been practicing capitalism, really. What they're protesting is some kind of crony capitalism.
Right. Capitalism would have allowed more Lehman failures. And, the politicians want to point back to the Lehman failure and lay the blame for everything that ensued from the fact that we didn't bail them out, as if bailing out Lehman Brothers somehow would have averted everything that happened in 2008 or 2009. I would say that the situation would be just as bad, if not worse, had we bailed out Lehman Brothers.
And people forget how really awful politically bailing out Lehman Brothers would have been. This is a firm, I worked at this firm, so I know. I mean, this was a firm that was extremely reckless and irresponsible with its real estate investments, and I mean, even more, way more so than Bear Stearns. So, it would have, if politically, if Lehman had been bailed out, it would have been, why are we bailing out these gamblers, It just would have been it would have been even worse. So letting them fail was the one good thing that they did.
Yeah, and we should have unfortunately let more companies fail. We should have let Merrill Lynch fail. Instead, we forced Bank of America to buy Merrill Lynch, and now look at the mess over at Bank of America. Although they bought Countrywide too, so they really doubled up on bad mortgages just as the whole market was imploding. But even firms like Lehman Brothers at the top of the real estate bubble, they were leveraging up to buy out the subprime mortgage companies. They were buying up the source of the inventory that they were collateralizing, and they paid top dollar to buy companies that within 6 months or a year would have been bankrupt.
Mm-hmm.
And we rewarded. We wanted to reward that.
Yeah, I know. Yeah.
But anyway, so what again? So I'm getting to your book. So what is the premise of the book, and what are you hoping to accomplish with it?
Well, that's the thing with the book. The book is just a story. I'm not trying to accomplish anything with it. It's my story. I worked at Lehman Brothers for 7 years during a very interesting time. I think I'm a pretty good writer, and the sort of the twist in the story is that I suffer from a pretty common mental illness. I suffer from bipolar disorder. And during the time that I was at Lehman, I had to be hospitalized, and I talk about that. And I sort of talk about the parallels between my illness and me, getting better, and Lehman getting worse at the same time. So
were you kind of caught up in the manic? I mean, during the period of time where everybody was making a lot of money, because of course this was a big party down there. I mean, the money was flowing pretty freely at Lehman. I mean, were you manic during much of that period, or was?
Oh, absolutely, yeah.
Yeah, and I'm sure. I mean, maybe the whole company. I mean, I could imagine what the parties were like over there in 2004 and 2005. Just as in the heyday of the real estate money making machine.
I mean, it was a pretty interesting. It was definitely a very interesting time. We're not going to see anything like that anytime soon. But there was so much Wall Street money just floating around New York City that if you wanted to get a dinner reservation, even at like a 4-star restaurant, you were going to have to bribe somebody a couple of $100, just to get a table. I mean,
in the mentality, I mean, when you talk, on your lunch breaks, or when you guys were going out to these expensive dinners, was there any talk about, hey, this can't last, this is some kind of bubble, that the money is too cheap, that Greenspan's got rates too low? Did anybody see this thing ending in disaster, or was everybody just so intoxicated by the money that they couldn't even think straight?
It's not so much intoxicated by the money. It's really more the phenomenon that you need to go through a couple of market cycles to acquire wisdom, And the business is so tough that, it's full of young guys, and maybe they last one half of a cycle or one cycle, and they don't acquire any wisdom. And usually and this is where I get back to what I said before. Organizations are stupid, right? So let's say, Goldman shorted mortgages, but Goldman's a special case. So let's say, Dick Fuld in 2006 had gone to the board of directors and said, I'm divesting Lehman Brothers of all mortgage exposure, and instead we are just going to start building up a gold business, right? They would have thrown him out. They would have fired him, and they would have found another CEO who would have, this is exactly what Chuck Prince said, CEO of Citigroup. He said, I'm paraphrasing. He said, as long as the music's playing, you got to keep dancing. I mean, there's actually like a lot of wisdom in that statement.
Yeah, I could see a lot of people on the board saying, you want to do what? You want to take our most profitable business and you want to get rid of it?
Yeah,
and
I know.
And so, I mean, he would have had to convince a lot of other people. Hey, there were plenty of copies of my book, though. He could have bought a case of them and passed them out.
This is why bull markets crash, because because people are stupid and organizations are stupid, and I've tried to explain that to people a lot. I've been in the press a fair amount over the last month or two with the book, and do I blame Dick Fald and do I blame Joe Gregory, and are these guys bad guys? They're just you know what, you and I talking here, we consider ourselves to be pretty smart people, but I'm not sure that if I'm in the same position as Dick Fald, I don't do something similar. That's what bull markets do to people. So.
Yeah, and the problem, of course, is, people are acting irrationally. Why? We'll talk about this when we get back. George Bush said Wall Street got drunk, and I agree they were drunk, but my point is where'd the alcohol come from? Who was the bartender? And there I thought it was the Federal Reserve. I thought it was Alan Greenspan. I think without the Fed and the cheap money, this party never would have got started. Anyway, we will be right back. We're talking with ex-Lehman trader and author Gerard Dillon. So we'll be right back.
The Peter Schiff Show. To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America, we're sorry. Peter Schiff is back on the air.
This is Peter Schiff here at the Peter Schiff Show. On the line, Jared Dillian, former Lehman trader, author of the newly released book, Street Freak, Money and Madness at Lehman Brothers. And, Jared, as you're doing your book tour and talking about this issue, now I hope you do something to shine a light on the real truth here, because the wrong lesson was learned from the financial crisis. We're all blaming capitalism, and we're saying that the problem was there wasn't enough in government involvement in housing or in banking, despite the fact that the government's fingerprints are all over this financial crisis, from Alan Greenspan and his buddies at the Fed financing all these transactions with cheap money, to Freddie and Fannie guaranteeing all the mortgages, and to the general constant drumbeat that was coming out of Washington, trying to get everybody to buy a home, regardless of whether or not they could afford it, pressuring banks to lend money, subsidizing through the FHA. All of this stuff was done by government.
Well, I don't really know the politics behind how this got started, but if you look at the homeownership rate in the United States, back in the 30s during the Depression, the homeownership rate was about 40%. And in 2005, it got up to 70%, okay? And basically the long-run average in the last 20 or 30 years is about 61%. I think we're at 65% right now. So we've gone from 70 to 65, and just to get back to the medium-term average, you have to go back to 61%. So somewhere along the line, the government decided that it's better if more people own homes. But the reality is that there's just some people that shouldn't own a house because they can't pay a mortgage, because they can't take care of the property, because they won't take care of the property.
Well, there's a lot of people. I'm 48. I didn't even own my first home until about 2 years ago. So, how did I make it to that age without owning a home? And, it certainly didn't diminish my ability to, generate wealth. I was certainly able to, do that, without owning a home and paying rent. But
the politics behind it, because, I think one of the things that makes me the maddest, I don't know if you have them in Connecticut, but we have these commercials in South Carolina for the National Association of Realtors, and basically talks about homeownership is the American dream, but it basically says that X percent of the economy is based on housing, and we need to promote housing. And I'm like, no, you don't. It's overinvestment in an asset class that is it's arbitrary that you're picking it. It's
right, and it's a depreciating asset. It's not, you're not investing in equipment and machines that can produce goods. You're talking about building a house that people are living in, and it is depreciating over time. It's not generating wealth. In many cases, they're not talking about income producing property. This is residential real estate that people are buying. But, a lot of people were buying houses because of the tax code. How many people have said, I've got to rent, I need the I have to buy, I need the tax deduction? I mean, people are making decisions to buy simply because they want to be able to deduct the mortgage.
Well, and not only that, and one of the biggest reasons I think this housing bubble happened, which a lot of people kind of don't talk about, and I don't really know why, but was having an exemption on capital gains up to $500,000 for a property. I mean, to the extent that we have capital gains taxes at all, we can discuss whether we should have them or shouldn't have them, but to the extent that we have them, we should have them on all asset classes, not capital gains taxes on some unfavored asset classes and no capital gains taxes on other asset classes.
Yeah, I wrote about that, too, in my book, especially, when somebody's just buying and selling a house and you're saying you can do that tax-free, I mean, that doesn't do as much good for the economy as somebody starting a business. So if you start a business and then you sell your business, that you had to pay the tax on. But if you just bought a house, lived in it for a couple of years, and sold it to somebody else, you got zero taxes. It encouraged a lot of people to be serial house flippers because, many people were making more money during the housing bubble. Many people were making more money on their houses than they were at their jobs. And, of course, they were paying a lot of income taxes and Social Security taxes on their salaries, but they weren't paying any taxes on what they made flipping real estate. And so this is, when people just say, hey, this is all about Wall Street, Main Street was getting rich, or at least they thought they were, off of this bubble. And if any politician had tried to put an end to it, they would have put an end to their career. They keep saying, hey, if we only had more regulation. The regulators were just as much captivated by this mania. In fact, any attempt to rein in Freddie and Fannie was immediately derailed by the congressmen who were supporting the entities.
Yeah. I mean, and the thing is that, it was unproductive activity. I mean, we were taxing productive activity. We were taxing the buying and selling of businesses, and we were taxing income, but we were not taxing unproductive activity, which is the buying and selling of houses. That doesn't produce anything,
Yeah, we were encouraging it. It made a lot of sense for people, especially when housing was going up. So, there are a lot of people, I made this point, there were kids that were going to college, and they would move into a town, and their parents would say, the way we're going to pay for your college is we're going to buy a condo or buy a house. You can rent it out and take roommates, and when you graduate, we'll sell it, and we'll have all this tax-free income that we could use to offset your college tuition. I mean, there was all sorts of things. I mean, people that were moving into towns, just living there for 2 or 3 years, they would buy instead of looking to rent a place. They would buy, even though they knew they weren't going to be there for more than a couple of years.
Yeah.
Because they knew they could sell and make a quick tax-free profit.
Yeah.
So all this, but despite all this government involvement, somehow the media spin is if we just had more government involvement, it wouldn't have happened. That the problem was there was too much unbridled capitalism, too much greed, and that's why there was a housing bubble. That's why there was a financial crisis. And if we just had more government involvement, government management, more rules, more regulations, that somehow all this would have just been avoided. And now because we've got all these new rules and regulations in place, that the future crisis is not going to happen.
I mean, it's actually, I think our goal for our economy should be to have an economy that is free of distortions, okay? So whenever you have, a regulation, a new regulation or an old regulation, it creates a distortion. And
yeah. Well, absolutely. And is that your focus over? I know your website is the Daily Dirt Nap.
It is www.dailydirtnap.com. That's for the newsletter, yes.
All right. Well, look, hey, I appreciate your sharing your experience with our audience and with everybody in your book. I wish you success as you travel around trying to promote both your book and your website. Anyway, thanks for being on the show. Everybody else, we got another full hour coming up on the Peter Schiff Show here at SchiffRadio.com. So don't go away.
The Peter Schiff Show.
You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
we have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on. Call in now. 855-4-SCHIFF. That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Hello, everybody. This is Peter Schiff. Hour 2 of the Peter Schiff Show is underway. Now we're taking your calls, 855-4-SCHIFF, on this Columbus Day, on this Thanksgiving Day for those of you up north in Canada. The markets continue to be strong. The Dow up better than 250 points. Gold still hanging on to about a $25 gain, looking at the GLD. The gold stocks, though, considerably off their morning highs. The index up about 1.5%. It was up over 2% earlier today, although the dollar is still on its lows. The dollar index right now just about 77.50. All the currencies are stronger across the board. The euro in particular overtaking the 136 handle, trading about 136.15. I think the strongest currency on the day is the Aussie dollar, up just over 2% on the day. It's been holding those games pretty much all morning long. Before I go back to the phones, although I'm going to take one call who's been hanging on a little bit longer, then I want to go and play some interesting sound clips, and we'll go back and take some more phone calls at 855-4-SCHIFF. But up next is Eric calling from Oahu, Hawaii. Eric, you're up early today. Welcome to the show.
Oh, thank you, Peter. It's Derek, but thank you.
Yeah, Eric, excuse me. Go ahead.
Yeah, so, about the values poll, NPR did a piece on that yesterday, and they did mention Ron Paul. They did say he did come in first, but then they switched to talking about how Romney didn't, and that was the whole conversation, which was, I don't know.
Yeah, so rather about having a conversation of the person who won the poll, they decided to discuss why somebody else lost the poll or didn't win the poll.
Yeah.
But, at least as I said, the show that I saw, and I think it was ABC, they mentioned the poll, mentioned how well Herman Cain did, but that was it. They didn't even bother to mention who won the poll. I mean, if you watched it, you might have assumed that Cain won it, because they didn't mention anybody else but him.
Well, NPR did not even mention Cain.
Yeah, well, he came in second, but
I don't know.
Yeah, it's just, but it's both the left and the right. It's kind of like a conspiracy, although I don't think it's a conspiracy, but it's going on both ends of the political spectrum. Ron Paul gets ignored by both parties.
Yeah, and you know what? I love Ron Paul. I'm not trying to say anything poor about him. He is 77, but I love Cain. I absolutely love Cain.
Yeah, as I said, I would like to see the race boil down to, although I like Gary Johnson a lot too, it's just Gary Johnson realistically is just so low in the polls that, he's a long shot of long shots. But I think it would really be something if the race came down to Herman Cain versus Ron Paul. I mean, that would really, really upset the media and the Republican Party quite a bit. So I would think that'd be an interesting race, and of course I'd still be pulling for Ron. But hey, at least if Herman Cain won, it'd be better than Mitt Romney or Newt Gingrich or Santorum or Huntsman or a lot of other traditional guys that the Republicans could nominate. Because after all, the Republican Party has a very bad track record ever since Ronald Reagan. Think about the people we've nominated in the Republican Party, whether it's Bush Sr., Bush Jr., Bob Dole, John McCain. I mean, come on, that's the best we could do.
Yeah, no, I can't disagree with any of that. But I would like to say that the one thing that would be most upsetting to Obama would be having a black opponent. I mean, how is he going to play the race card with a black?
Yeah, well,
I mean,
well, the one who could play the race card would be Cain because he's blacker than Obama. I think it'd be funny to see the race card played against Barack Obama. Wouldn't that be justice?
I think he's doing it. I think he's doing it. I don't know. Like I said, I love the guy. Hey, the reason I called is I just wanted to say thank you. I've been listening to your show for about 8 months now. And I can walk into conversations and I can talk in a clear and intelligent and informed manner, which I could not do before. So you've really empowered me. You've really empowered me, and I just cannot thank you enough for doing that.
Oh, well, appreciate it. You know what? I'm thinking about economics. We got the Nobel Prize. The Nobel Committee once again overlooked me in their awards. 2 Americans are sharing the Nobel Prize in economics, which must mean they must have flunked the test in basic economics, because I kind of think that in order to win the Nobel Prize these days, you have to prove that you know nothing about economics. So maybe that's one of the reasons that I can't win it. But anyway, but at least I know that I am out there influencing people and helping them think straight.
Yeah,
I guess they don't have a Nobel Prize for that. But, my brother is heading to Germany next month to accept an award for both of us. We won from a German company for our book, How an Economy Grows and Why It Crashes. So it's interesting. The first time we've ever gotten an award for a book, and it didn't happen in America. It happened in Germany. So that's interesting. My other book, too, Crash Proof 2.0, the paperback edition, I believe is coming out next month. I think people can already pre-order it on Amazon. So, it's no different. I think we have a slightly different introduction, but it's less expensive than the hard copy. So if people are looking for Christmas gifts or, just gifts to give to their friends to help educate them, the paperback edition of Crash Proof 2.0, maybe you can even roll it up and stuff it in a stocking. Although, well, I guess it's maybe a little early to be talking about Christmas presents, but hey, maybe you can give it away. You can give it away to the trick-or-treaters.
Just 2 things really quick. First of all, what a better place than Germany. I mean, seriously, they really turned things around. They were in the same spot we were in, and they made a change, and they did it. So what a better place than Germany to receive an award.
And Germany they understand hyperinflation, and that's where, unfortunately, we're headed if we don't do the right thing. So, yeah, it is a good, and, in Austria, the birthplace of Austrian economics. I mean, the award is in Bavaria down there in Munich. So there's probably a lot of Austrian influence down around that part of Germany. But anyway, thank you for the call. Hey, I want to play some interesting sound. First of all, from a congressman. This is Representative Keith Ellison, Democrat from Minnesota, who's on MSNBC trying to claim that more regulations on businesses are actually going to create jobs. Remember, this is kind of like what Senate candidate here in Connecticut, who's now senator from Connecticut, claimed in his debate with Linda McMahon. And in that campaign, the comment was that lawsuits create jobs. Blumenthal, Senator Blumenthal is the one that made that comment. Of course, he is a lawyer, and his friends are lawyers. So, yeah, lawsuits create a lot of jobs for lawyers. That's the problem. They create jobs for lawyers. They destroy jobs for everybody else. And the jobs that are destroyed are far more productive than the legal jobs that produce nothing but red tape and get in the way. So this congressman is saying it's okay to put more regulations on businesses because, after all, that means businesses will have to hire more people to help comply with the regulations. How clueless can you be? Before I comment on the statement, let's play it. It's cut number 3.
Do you think that, requiring employers to provide health insurance for their employees if they grow above a certain size, that sort of thing, these other regulations, don't you think that they do have a negative effect on employment? Even if you think they're worth it, don't you agree that you are costing jobs by putting all these mandates on both employers for the sake of employing and just on businesses in general?
Well, let me just tell you this. I think my answer is no, and here's why. When we talked about increasing fuel efficiency standards, the industry responded. They responded, and they needed engineers, designers, and manufacturers, and they needed actually more people to help respond to the new requirement.
What's going on? Where'd that music come from? Oh, we got a break. I did just timed with the end of that sound clip. So we will be back. I'm going to discuss what the congressman said, and I'll take more phone calls when the show resumes here on the Peter Schiff Show at SchiffRadio.com.
And the streets no place to be, but
The Peter Schiff Show.
So you try hard, or you die hard.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America. We're sorry. We're sorry. Peter Schiff is back on the air.
And this is Peter Schiff here at SchiffRadio.com. And before the break, we played a sound clip from Representative Keith Ellison, who told MSNBC that regulations actually create jobs because businesses will have to hire people to help comply with the added regulations. Well, where does the congressman think the money comes from to hire all these non-productive people? And how many jobs are destroyed because of the jobs that the regulations create? Because on net, they don't create jobs. Sure, they do create jobs for regulators and for compliance people, but those jobs are at the expense of other jobs that are either destroyed or never created in the first place because of the resources devoted to these rules and regulations, and because how much less productive complying with these rules and regulations makes a business. I could give you an example from my own industry. You know, when I started my brokerage company, Euro Pacific Capital, I was the chief compliance officer myself, and I did all the compliance work in my spare time. In addition, I was the sole stockbroker. I generated all the revenues. I had a sales assistant / receptionist. So it was initially me and one other person. But had the government passed all these rules and regulations, you could say, well, maybe I would have had to hire a compliance officer sooner, maybe even a senior compliance officer and an assistant compliance officer. So would the existence of those two extra jobs, yes, the government could claim, hey, we created a couple of jobs. Well, what might have happened is the cost of hiring a compliance officer may have been so high that I could have afforded it. In fact, had I had to hire the compliance officer right off the bat, I may have opted never to leave my job as a stockbroker. Maybe I would not have formed my own brokerage firm because I wouldn't have had the resources right off the bat to have afforded one or two full-time compliance people, which would probably be the case today if somebody tried to start a brokerage firm from scratch. Now, of course, today, my firm is a lot bigger, and, of course, the compliance department is a lot bigger. I can afford to have 8 or 10 people, I forget how many people, are working in compliance. So you can say the government can claim credit through FINRA for, a number of jobs that I have that clearly would not exist if these rules and regulations did not exist. But what you can't really put your finger on is how many jobs didn't I create because I had to spend all this money creating compliance jobs. And, in fact, how much less competitive and less productive is my business as a result of these compliance jobs. Maybe you could say that if I didn't have 10 people working in my compliance department, maybe I would have 1,000 people working in other divisions of my company, but I don't have those people thanks to the compliance jobs that I have. And that's going to be the case across the board. Any company that has to spend more money complying with rules and regulations, even if it means hiring people to comply with those rules and regulations, is hiring those people at the expense of hiring other people that might have otherwise been a lot more productive. And in fact, having all these compliance people means that the people that you do hire are less productive than they otherwise would have been because their productivity is being impugned by the rigorous enforcement of rules and regulations that are undermining what otherwise have been productive work. So the fact that we have people in Congress who think this way, we got to get rid of these guys. That's why it's very important to have people running the country who have actually run businesses, who have actually had to deal with rules and regulations, from the perspective of the company that's forced to deal with them, not just the politicians that write them in a vacuum, because, of course, whatever rules and regulations they pass, Congress exempts themselves so that they don't even feel it, even in the fact that, you have all these senators and congressmen, they have a staff. So even though they're not employing people with their own money, they're still acting somewhat like an employer, but of course they're exempted from all the rules and regulations that they enforce private sector employers to comply with. Now, I want to play one more clip, this time from President Obama's weekly radio address, where he is talking about why we have to make the millionaires and the billionaires pay their fair share. Anyway, here's one cut from this rather lengthy speech, cut number 12.
Some see this as class warfare. I see it as a simple choice. We can either keep taxes exactly as they are for millionaires and billionaires, or we can ask them to pay at least the same rate as a plumber or a bus driver. And in the process, we can put teachers and construction workers and veterans back on the job. We can either fight to protect their tax cuts, or we can cut taxes for virtually every worker and small business in America. But we can't afford to do both. It's that simple. There are too many people hurting in this country for us to simply do nothing. The economy is too fragile for us to let politics get in the way of action. The people who represent you in Washington have a responsibility to do what is best for you, not what's best for their party or what's going to help them win an election that's more than a year away.
Here's one thing I actually can agree with the president on. He said that we can either keep the taxes on millionaires and billionaires the same, or we can ask them to pay the same rate as a plumber or a bus driver. Yeah, let's do that. Let's force the millionaires and billionaires to pay the same taxes as plumbers and bus drivers, right? I'm all for that, because you know what that means for me? That means a big, fat tax cut. I wish that President Obama would force me to pay the same income tax as a plumber or a bus driver. I really wish that he would do that. I can only get tax relief to the extent that Obama is talking about. I mean, he'd more than cut my taxes in half if he were to put me on the same level as a plumber or a bus driver. This new millionaire surtax that he is now signed on to, that the Congress has adopted, and Obama is signed on to it, this is going to raise the taxes on the millionaires and the billionaires even higher. So instead of lowering them like he said he wants, because he wants the millionaires to pay the same taxes as bus drivers and plumbers, instead he wants to raise them up. I've got some statistics here of all the people in the U.S. that pay no federal income taxes at all. And roughly half of all Americans pay no taxes, right? And, of course, the president isn't saying that they're not paying their fair share. They're paying no taxes at all. But the fastest growing segment of the American population that is paying no taxes are people earning between $75,000 and $100,000 a year. This is the fastest growing segment of people paying zero in federal income taxes. Now, there are, according to the IRS, since 2009, there's about 20,000 filers that make over $200,000 that pay no income taxes. And out of that, about 1,470 people make over $1 million a year and pay no income taxes. But you know what? If you're making $1 million a year and you're paying no income taxes right now, even though the rate is 35%, if they raise the rate to 40%, you're still going to pay no income taxes. The only people who are going to pay more income taxes when they raise the rate to 40% are the people who are already paying 35% like me, which is much more than a typical bus driver or plumber. Anyway, we will be right back with more of the Peter Schiff Show, so stick around. This is Peter Schiff on SchiffRadio.com.
The Peter Schiff Show. We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Rebel Radio.
The Peter Schiff Show.
This is Peter Schiff here at SchiffRadio.com, and watching the markets here, gold is making new highs on the day. Looking at GLD now, up the equivalent of $33. The gold stocks themselves still well off their morning highs, but we'll see if they can follow the metal to new highs. The dollar making new lows as the dollar index now below the 77.50 level. Look at that euro moving up. I bet a lot of people are getting stopped out of some of these short euro positions. The euro right now 136.30. Taking out, I think, a lot of stops. There was a lot of negativity on the euro late last week. In fact, if you look at the euro currency, it went all the way down last week to 131, and right now we're trading 5 full figures higher above 136. I remember Dennis Gartman being very, very negative on the euro late last week. So a lot of people were getting short, probably having to cover up those positions as we speak. Other currencies on the highs of the day as well. New Zealand dollar on the high of the day, Aussie dollar. Before the break, I mentioned this whole idea about this millionaire surtax. And, there are 1,470 people I mentioned, according to the IRS, who make over $1 million a year, yet despite making over $1 million a year, pay no federal income tax whatsoever. Raising the top rate from 35 to 40% will do nothing to affect those individuals. They will still pay no federal income tax. I mean, if you're paying no income taxes now, despite the fact that the top rate is 35%, it doesn't matter what you raise the top rate to. You can raise it to 60 or 70%. The people who are paying no taxes today at the 35% rate are still going to pay no taxes. So you're not going to do anything. And, of course, if there are people that are paying at 10 or 15%, even though the top rate is 35%, moving the top rate from 35 to 40% doesn't affect those individuals, although it would affect them to the extent that they're paying capital gains, because now if they're paying 15% because of capital gains, well, now they'll pay 20%. But if they're paying nothing, clearly it's not going to matter. But the real impact of this millionaire surcharge is going to fall on the people who are already paying 35%. They're going to be forced to pay 45%. And at 35%, they're already paying, I'm sure, at least twice the income tax percentage as the bus drivers and the plumbers that Obama is talking about. And if you want to talk about it in raw numbers, if you want to talk about how much more money the typical person making more than $1 million is contributing to support the government than is the typical plumber or bus driver, I mean, you're talking about hundreds of times the amount of money, maybe even thousands, despite the fact that everybody gets the same treatment under the law. Doesn't matter how much you pay in taxes. You're still one American. You get one vote, right? If you pay $1 million in taxes, you don't get any more votes than the guy that pays $10,000 in taxes or doesn't pay any income tax at all. It's still one vote. You still get one Social Security check. In fact, I think you max out once you get to about $100,000, so you're going to get the same check. Somebody who was making $10 million a year is going to get the same Social Security check as somebody who was making $100,000 a year. Doesn't matter how much more he paid in. It's the same Medicare. Of course, it's the same national defense. You get the use of the same embassy. If you travel to a foreign country, you want to go to an embassy, you don't get better treatment based on how much taxes you pay there. Everybody is treated the same. So if you think about the disproportionate amount of support these high-income earners are paying for the government, instead of criticizing them, we ought to be thanking them for doing more than their fair share, not simply in the payment of taxes, but everything else they do. They're creating the jobs, they grow the economy. But no. Instead, we want to vilify them and try to, discredit them and say they're greedy and they need to pay more. All this nonsense. But anyway, let me go back to the telephones. On hold is Steve calling from Detroit, Michigan. Steve, welcome to the show.
Hi, Steve. How are you?
Good. What's on your mind?
Peter. Yeah, I actually have two questions. The first one is, I've read a couple of weeks ago that there was a proposal by the Obama administration in terms of the mortgage market, where they're trying to get people who are upside down, who are trying to refinance into a lower rate, to raise the loan to value to 125%. I don't know if that bill is being proposed right now, but I want to know what effect something like that would have on the industry, about people reinvesting, and also mortgage bankers as well.
Yeah, I think that's going to have a negative effect on the banking sector and on the economy. It's not going to have a positive impact on the housing market. What it's going to do is it's going to allow people who are right now, let's say somebody is paying on a mortgage and they're paying 6%, even though the current rates are maybe 4.25%. They can't get the 4.25% because nobody will refinance them because they owe more than their house is worth. Well, if you make it possible to refinance by guaranteeing the loss, and I guess that's what would have to be doing, the government is going to have to guarantee to make up the loss on these mortgages, although the government is already, on the hook for it if it's a Fannie or Freddie loan. But what's going to happen is you're going to take somebody who was paying maybe 6%, and now they're going to pay 4.25%. So from the perspective of that individual homeowner, there is a lower payment. But what about from the perspective of the banking sector? Now the banks are going to start losing revenue because a guy that was paying 6% is now paying 4.25%. That means it increases the losses to the financial sector, which increases the amount of money the government's going to have to spend to bail out the banks when they fail. It's going to increase the losses on the insured mortgages because the mortgages that pay, the government is going to be collecting a lot less, or the banks are going to be collecting a lot less to offset the losses for the people who don't pay. So it's ultimately going to backfire, and of course it is a moral hazard when you allow this to happen. So none of these quick fixes are going to work. It's all schemes that the government is trying to come up with rather than allow the market to efficiently solve the problems that government interference has created.
Why would that be a moral hazard?
Well, to allow people to refinance their mortgages, even though they don't owe, they don't have any equity in the properties. I mean, when the lower you make people's mortgage payments, if they're able to stay in a property that they really can't afford because you gave them a subsidized mortgage rate, they might stay in that property longer than they otherwise would have. And rather than maintaining the property or take care of the property, they allow the property to further depreciate. They don't make the repairs. Maybe they don't pay some of the property taxes. Ultimately, they end up losing the property anyway. But I think it ends up keeping people in homes for which they have no equity, because you're not going to restore the equity. And so people are still going to be underwater on these properties. And you're rewarding. I mean, you're basically saying to somebody, hey, you overpaid for this house. And now we're going to let you refinance your mortgage, even though the property is worth so much less than the mortgage. I mean, it's what about the guy that put a much bigger down payment? He's basically saying, hey, why did I do that? I could have just had a very small down payment and get a loan to value of 125%. You don't want to reward that kind of behavior.
Right. And the second question is, I was talking to your screener. I know I missed the first part of your show. But, again, I was watching Meet the Press yesterday, and it seemed like they talked all around Ron Paul. I know, and that's on NBC. And I know you said you watched ABC.
I watched them all. I was flipping on all those channels. I wanted to see if anybody would mention the fact that Ron Paul won that straw poll.
Well, here's the question for me. I don't even know if you can go into or even have the desire to. But for a complete shutout on all the major cable television, what or who has the power to control all of those networks? Is it a decision being made, or is it just...
No, nobody is controlling the networks other than each individual network and their own programming directors or their own producers of these news shows. They decide independently what they want to cover. And it seems to be that people have come to the conclusion that if Ron Paul wins a straw poll, that it's not newsworthy. But that if somebody else wins the same straw poll, it is newsworthy. And this is, there is nobody setting this policy for all these networks. I mean, they're free to cover the news the way they want it. This is just the way they choose to cover it.
You think it's just a coincidence that all of them are not covering Ron Paul and his win?
Well, it's a coincidence in that they all think that he's not a viable candidate. They all think that if he wins a poll, it's because it's rigged, and therefore they're not going to cover a rigged poll. I think this is the generally accepted consensus, and that's how the media handles it, But anyway, thank you very much for your call. I want to move this along. Next caller is Jack calling from New Orleans, Louisiana. Hey, and by the way, as long as we're talking to someone from New Orleans, to remind everybody that we will be down in New Orleans for the investment conference. I think it's October, 22nd or 24th. The information is on my website at Europac.net. And anybody who registers through and mentions the Peter Schiff Show, when they register, it's a special promotion. Not only do you get a discount, but you get all three of my books for free, which I will be happy to autograph if you bring them by our booth at the New Orleans conference. But anyway, Jack, welcome to the show.
Thank you, Peter. I'm seriously considering if I can spare the time going to the conference, then I could meet you.
Have you been to the conference before?
No, I have not. I have not.
All right, well.
But it sounds good, and I'm a Euro-Pacific investor, Perth Met, and et cetera, and I listen to you all the time.
All right, well, we hope to see you there. It's always a fun conference, and it's great to meet clients when I'm down there. So.
Well, thanks. Well, I got you now, and I do want to ask some questions. One, I have a lot of energy stocks, energy-related stocks, and on the basis that will help cover me with inflation, and plus the fact that the Pacific Rim economies are, although they're not going now, they'll blossom and suck up a lot of energy in order to push the values and the prices up. But that hasn't, it's all down right now. I mean, I've taken a bath in all these investments.
Yeah, well, all the oil and other commodity-related stocks have calmed down pretty sharply in the last month or so, as a lot of people who were betting on recovery took those bets off the table. But ultimately, I think the inflation bets and the bets on a global recovery, ex the U.S. and maybe even ex Europe, are still going to pay off. And so I would not, lose the faith on these energy-related names. In fact, look at oil today, up close to $3 a barrel. I think when oil starts to move, I think it's going to move very fast, and I think a lot of people who have sold down these oil names are going to be scrambling to buy them back, and I think they're going to be paying much, much higher prices when that happens. But anyway, I don't know if you have a follow-up question. We got a break if you want to hang on. We'll be right back here on the Peter Schiff Show at SchiffRadio.com.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com. Again, the show moving along very quickly. We are already at the final segment. I'll try to get in the remaining calls. On hold before the break was Jack calling from New Orleans, Louisiana. Jack, I understand you had a follow-up question.
Well, I did, concerning the Federal Reserve. Bernanke is just, it seems to me, he's just one vote, although important vote. But what if the other directors go against him? And, I've got a lot invested based on the inflationary scenario. And what if they reject what he's doing? How does he have so much control?
Well, there's no short-term precedent for that. I mean, they do have some people that dissent. In fact, at the Operation Twist, there were a few dissenters. In fact, I think one of those dissenters has already left, and so Obama will probably replace him with somebody more, amicable to inflation and money printing. So the composition of the Federal Reserve is likely to move, even more dovish than it is today. But, the Fed chairman seems to set the tone, and most people just follow lockstep behind him. In fact, even some of the people that dissent initially, fall in line by the next meeting, and they just register their opposition one time, and then they kind of toe the line after that. So I think that there's very little chance that we're going to have a Fed chairman overruled, outvoted by the other members of the FOMC. So I think the only way we're really going to get a different policy is if we get a different Fed chairman. Now, it's also possible that Ben Bernanke can see the light and have an epiphany and change stripes. I mean, that's possible, but I don't think that's going to happen until a lot more damage has been done by his current policy. They're going to pour a lot more gasoline on the fire and make the fire a lot bigger before they finally potentially make the connection between the fire getting bigger and throwing gasoline on it. But it's going to take a real enormous inferno before they actually reach for the water.
Do you think that he agrees with you, by the way, which I don't understand, that inflation lowers wage rates? And I don't really understand that, but that lowering wage rates may increase jobs, I guess.
Yeah, well, what by lowering wages, let's say the minimum wage is, $7 an hour, and you create a bunch of inflation and prices start going up for things, and now adjusted for inflation, the minimum wage is $6.50 an hour. So by lowering the minimum wage, now people can get jobs who were priced out of the market at $7 an hour. So there's somebody who's worth $6.75 an hour who's not going to get a job at a $7 minimum wage, who will get a job at a $6.50 minimum wage. So by creating a lot of inflation, if the minimum wage is not increased, you effectively lower the minimum wage. The same thing happens with union contracts. If unions have negotiated wage agreements and companies are required to pay a certain wage, and now all of a sudden there's a lot of inflation, that the real value of that wage is diminished. And assuming that there is no subsequent contract to raise wages, you're bringing down wages, and that is what's creating more jobs. Jobs are like anything else. Prices are determined by supply and demand, and wages are simply the price that you pay to hire somebody. It's the price of labor. And if you draw the curves, the lower labor costs are, the more demand there is for workers, the higher the demand, and so you create jobs. And if anything that raises wages will diminish demand for employment, and it will destroy jobs. I mean, it's very simple, basic economics. Too bad nobody can win a Nobel Prize for pointing that out, because that's what we need to know.
Yeah, what you were saying is in not in nominal terms. In other words, it doesn't. The wages go down relative to inflation, not. Yeah,
they go down relative to the price of everything else. I mean, that's what matters. It's real wages. I mean, the nominal wages aren't as important because if prices are rising for everything faster than the price of wages, then the real wage is falling. See, but the problem is, even when you reduce wages because you create inflation, if the government is making employment that much more expensive with new rules and regulations, even if real wages are coming down due to that, they could actually be going up due to the counteracting effect of more rules and regulations. So a lot of what the Fed is accomplishing, in quotes, to bring labor costs down by creating inflation is being reversed by all the things the government is doing to push labor costs up.
Right. Well, now I understand it. Then I'm going to continue on with my investment strategy, which is based on the Pacific Rim overcoming the bad economy in the United States and continuing to.
Well, I think that's a winning strategy. You just gotta ride out the bumps. Anyway, thanks a lot, Jack, and look forward to seeing you down in New Orleans. Not sure I have much time left, but I'll let Jason from Missouri or Maryland make a quick comment. Go ahead.
Quick question. I'm looking at the news with this whole, Occupy Wall Street, and I was wondering, I don't know if you've seen their demands, but the demands are crazy. Like, they want $20 an hour.
Yeah, I read those demands on the show, and they are crazy. I'm wondering how many people who are occupying Wall Street actually understand that those are the demands. Because, I think there are a number of people there that are not really protesting capitalism, but crony capitalism. There's probably, some free market guys in the mix in there, but I think, some of the real socialists have overshadowed the Occupy Wall Street movement, and certainly the media is focusing on that aspect of it rather than maybe the legitimate protests of the crony capitalism, because that's what they're protesting. Whether they know it or not, that's what they're protesting, not real capitalism, not free markets. If we had that, they wouldn't be marching on Washington, and if they on Wall Street. And if they understood the problem, they'd be occupying Washington. They wouldn't be occupying Wall Street. But anyway, hey, Jason, thanks for listening. Thanks for calling. We're up. That's it for today. I will be back again tomorrow live from Canada for another episode or edition of the Peter Schiff Show on SchiffRadio.com. The gold standard.